Now, there's one big exception to this, one big difference, and it's the fact that it bypasses the banks. Instead of having your bank account with, Simple Bank or Chase Bank or Wells Fargo, you're just going to have a wallet that is held at the central bank. So you're going to have a Federal Reserve wallet or a Bank of Japan wallet. And so instead of using a bank account, you're just going to have an account directly with your central bank. In the case of the United States, the Federal Reserve. Now, in the case of China, the way that they did this was they said, hey, we're going to give out a bunch of money. It'll be based on a lottery. So you've got to download the app and then you hit the button to see if you win any of the money for our trial of our new Central Bank Digital Currency. And so they got a ton of people to download the app, and then some of them got some money, and they were able to use that money to spend just like they would spend their money like anybody else spends their digital money. You swipe your debit card, you use Apple Pay, whatever you want. Now, the one restriction on this was that they couldn't use this new money to purchase any other form of money. So they couldn't go buy dollars with it. They couldn't go buy gold with it. And so this is an example of what I'm talking about, where it's you need permission on the types of transactions you can do. We already have that in most of the world today, especially in America. Banks and bank accounts and businesses. It's really hard to operate inside the banking system if your business has anything to do with guns or gold or marijuana. There are a lot of restrictions on that, and they already watch and see all the transactions that go through because they monitor, the banks monitor this, but it'll essentially be streamlined and all put together into one single cohesive platform underneath the central bank, bypassing all of those layers that are, in the normal banks. And so this will be much more efficient, theoretically, to be done, centralized, because they'll be able to see these are the transactions we want to allow. These are the transactions we don't want to allow. Now, one of the benefits for this that the central bank will be able to do is that they'll be very, very easily able to inflate the money supply, because they can just credit certain users' accounts with money. If you make a certain amount of money or under a certain amount of money, they can credit your account with more money. They could have expiration dates on these digital dollars that if you don't spend them by a certain time, they just go away. And so this will give them much more control to have some outcomes that they want to see in the economy, whether they want to increase the amount of spending to increase the velocity of money, versus now they don't have as much control. They have more of a blunt tool with their interest rates and their quantitative easing. They rely heavily on the banks to lend. And so this would completely bypass the need for banks to lend to cause some of the inflation numbers that they want to see, because they can directly credit users' accounts with money instead of relying on banks to inflate the money supply through lending. Now, the other way that quantitative easing currently inflates the money supply is through government spending, because they're basically funding government spending. But then you run into political gridlock like we're seeing right now, where it takes forever for a bill to pass for spending to happen. And so this would allow the central bank to basically say, we don't need to wait for Congress to spend this or Congress to pass this bill. We're just going to credit users' accounts with, $1,000 as long as they made under, $100,000 this year. And they could do it like that.